The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
Hello everyone, this is the Reckless Investor, or Marquise. Today we're going to look at Chevron and do a stock analysis of the company. What is Chevron? Chevron is an oil company that produces crude, natural gas, and other things to help benefit the consumer. So today, right now, Chevron is up 18.53% from the year to date. But however, from that 52-week high, they're down 25.2 or 20%. On average, that is roughly negative 3.34% return year to date. So, but let's begin the clear picture. We can see right now that Chevron is in blue, BP, or British Petroleum, is in orange, and Exxon is in gray. We can see that the 5-year revenue growth has gone up 29.5%. But the revenue has not performed well, unlike BP and Exxon. Then here's the profit growth, the 5-year profit growth. They have gone up almost 48. There you go. Sorry, they have gone up 48%, 48.2%. Again, another case where the profit hasn't been better than BP or Exxon. Right now, currently, they're second. They're just barely beating out Exxon right here this year. But Exxon has done more than either BP and Chevron. Their net income, they're up 103.18%. So I want to talk about the big elephant in the room. The 2020 oil crash. BP and Exxon crashed the hardest, while Exxon is the one that fell the hardest, over $20 billion in debt in the market crash of 2020 in March. But Chevron used their money more wisely, I guess you could say, in that market crash. They didn't crash as hard, but they still were in debt. I think it was about $2 or $5 billion in debt, while Exxon and BP were about $20 billion in debt. But we can see, even with that low net income loss, they didn't grow that crazy right there. The one that grew crazy, we can see right here, it is Exxon. Exxon grew the most, they recovered the fastest, and performed better than both Chevron and BP. BP is still recovering, but Chevron is what the topic of today. They didn't recover as fast, but they don't need to. So this is the free cash flow growth of the past 5 years. Chevron is on 108.48% 5-year average growth, which is fantastic. From 2016, they were under 1,000 or under $1 billion, and now they are sitting at about $22 billion of free cash flow. Again, with that recovery from the 2020 crash, Exxon has done the greatest 1-year growth in free cash flow. They were in debt free cash flow wise in 2020, but now look, they're pushing over $35 billion in free cash flow. That 1-year jump is crazy. Here's the price of free cash flow. If you don't remember, price of free cash flow is simply the sales comparable to free cash flow. Hey, what the hell? Why is Mr. Market here? We're talking about Chevron. If you like the video so far, please hit the like button and subscribe, and we'll keep Mr. Market off the screen. Thank you. Well, as I was rudely interrupted by Mr. Market, we can see that actually Chevron is roughly a good price to free cash flow company from 2016 to roughly 2020. But all three companies are roughly under or fair valued now. But we can see the giant elephant in the room of BP. BP in 2020 was super overvalued in 2020. Their number hit 20 or 200, close to 200. That is super, super overvalued. I've never seen a increase that drastic in a little while. But they recovered in 2021, and now all of them are, like I said, are fairly valued. And for a bit, in 2016, 2017 to 2018, BP and Exxon shared the same price to free cash flow. Probably a little bit different by a few cents or a few points. But yeah, right now Chevron looks like the best price to free cash flow. So free cash flow yield. For those that don't remember as well, the free cash flow yield is simply can they make the yield on, how I can explain this. Free cash flow yield is simply can they make free cash flow. Again, you want that above 5. So for a while, from 2017 to roughly middle of 2019, Chevron was the better option free cash flow wise. And in that same time, actually no, not at the same time. In 2017 to 2019, BP was not the right one to pick. But right now we can see that Exxon is the better choice. That means 14% of their income will be going to free cash flow off their sales. So their debt to free cash flow is. Oh, well, I'm gonna go back. Oh, okay. I just want to make a correction. I know it says there was an X on free cash flow yield for Chevron, but it's not. It's actually a check. I forgot to change it. That's my fault. Sorry. Bye. Not bye. I got more to do. So the 5-year debt to free cash flow is simply how long can they pay off their debt with their free cash flow. So 2016 Chevron was about 25, negative 25. That's bad. That means they don't have enough free cash flow to cover their debt in that time. So about here, it'd be about 5. So Chevron was good here. Actually, in a sense, let me erase these. In a sense, Chevron was good here. Same with BP. Exxon. Exxon was a little bit overvalued, or a little past 5. Past 5. Definitely past 5 right here. So, but right now they're negative 1.02. That means they don't have enough free cash flow right now to pay off the debt to free cash flow in less than 5 years. Shares outstanding. BP has almost 20,000 shares right now, or 20,000 or 20 million shares right now. That's crazy. But you can see a slight increase in Chevron shares. They have gained roughly about 40 million more shares than it was 5 years ago. So that's an X. We don't want to see increase of shares at all. So now here we're talking about return on invested capital. You want to see this above 10. And so far the only one is above 10. Let me do that again. Let me redo that again. It is BP. Exxon and Chevron was close in 2018, but then they dipped. They dipped below 0% in 2020. They all kind of dipped. BP dipped in 2019. Chevron and Exxon dipped in 2020. But since 2019, BP has been on a good, solid run on their return on invested capital. And you can kind of tell, but actually Chevron's third. So just barely third in the race for return on invested capital. But yeah, so far, Chevron, according to these numbers, Chevron hasn't really been doing, if you want a company to be first, Chevron hasn't been really in the running to be the best one in a 5-year span. And we get a similar numbers on the return on equity. Is that, and you want this above 10. Exxon for roughly 2 years, or 2 full years, from 2017 and 2018, Exxon was the best one return on equity wise, while Chevron was just barely under 10%. Then they kind of have a similar dips. And again, right now BP is a better company return on equity wise. Again, Chevron's third. I'm surprised how popular Chevron is as a stock for people to own. But if you look at the numbers, and compared to BP and Exxon, they're typically are third in these categories, from these metrics, or these filters, whatever you want to call them. But it's a good company financially. So it just baffles me when I see this stuff. So let's get to the gut check score. Their gut check is 4 out of 13, which is 69.23. That's a okay score. And again, that's supposed to be Chevron. I apologize. It's late. And I kind of use the same format for my Costco video, which I just posted. You can see up in the top right corner. But let's see what price we should pay for it. So this one right here, I get a discount cash flow fair value of $131.13. My second one is roughly 5 cents or $5 less, by $126.96. So almost 127. So if you average them both of them out, you get a score or a fair value of 129.04. So I am gonna wait to buy more, either fractional shares or try to see if I can buy a full share once Chevron gets to the value of 129.04 cents. I'm not buying any more Chevron now. They're overvalued. Not a lot, but still they're overvalued. But thank you for watching, and tell me what you think about the video and how you like the new format. Please leave a comment, subscribe, and help us keep Mr. Market away from our gains. Thank you. Take care.